Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is 6:52 a.m. on Tuesday, March 29th. As I'm starting the video, it is 6:52 a.m. Taking a quick look at futures, equities, not a lot going on. Toggling near the flat line. Bitcoin's down 1%. As is gold and silver. Copper's flat. Oil's up 1%, but it got hammered yesterday, down about 9 or 10%. Macro front, Case-Shiller Housing Index, consumer sentiment, got a JOLT survey, and a 7-year bond auction at 1 o'clock. This morning on earnings, got Academy Sports, ticker ASO. I have not looked at the chart lately. We were in that, it's probably been 6-8 months ago. I think it's pulled way back since then, but that's reporting this morning. And then this afternoon, we've got quite a number of marquee names. We've got Micron, Lulu, Restoration Hardware, Chewy's. Sportsman Warehouse is a ticker that I sent out yesterday. It reports earnings this afternoon after the bell. They may make some comments about their buyback program and other activities that are going on along with their regular earnings. And then PVH I had down for this afternoon as well. So, yesterday was Back to the Future kind of day. Where the animal spirits were really taken off, specifically focused at the meme stocks. I mean, going down GameStop, AMC, Bed Bath & Beyond, NEGG, NEGG. Those were all zooming higher. And if that's your thing, you probably know a lot more about it than I do. But I just know that all the, those names from a year and a half ago, people are gravitating back into them and really, really moving the stocks around. So I think that's exactly the kind of thing that, Jay Powell wants to stomp out of the market. But obviously, the bulls are winning, and people are going to gravitate to those things. And once that momentum starts going, people will just pile in and keep the moves going. I would have participated, but I didn't see it till it was too late. So, anyways, keep your eye on those today if you're interested in some volatile type action. Today, those might be good intraday trades for you. On the blog site this morning, I will post the static charts of the oscillators and the high-low for both the NASDAQ and the NYSE. You'll see that again, no appreciable net new highs. So at least at this juncture, the market breadth has still not expanded that would give you a ton of confidence that this rally can last. But that said, price talks and everybody else walks. So let's take a look at it. So yesterday we had a pivot down at 450. And we got a nice move into this prior trading range that runs from 450 to 470. So just from a pure technical standpoint, once you re-enter an old trading range, the target becomes the top of the box. Now that doesn't happen every time, but this market hasn't shown any inkling that it wants to pull back in a major way. That's a unidirectional move, a strong move. So here today, we've got some prior resistance at the top here, right around 456. it can break above that, then you've got a gap above to work on. And that gap runs from 460 to 465. You can see some resistance here at 456. I think that's your clear pivot today. You get a break above that and hold, then you can set your eyes, set your targets towards that open gap. You can just see with the zoom in 30-minute chart, where we're at, kind of off the scale here, so not all that useful, but it will give you some granularity if there is a pullback at any point this afternoon, tomorrow, whenever. I think I forgot to tell you, if you're new to the channel, please run the player at 1.5x. I'm not the quickest speaker in the whole wide world, and I think that you'll get that'll be a nice speed for you. So run it at 1.5x if you're new. Let's move on to the Qs. Downtrend, big bounce. We've recaptured all the moving averages. Whenever you see price above all the moving averages, regardless of how they're stacked, it's bullish, because all these will now act as support on the way back down, starting with the most important, the 200 here that comes in about 357. So I think for today, you can use 360. You got a gap above, then you got another gap above, and you've got a fib retracement line, 618 fib at 371. So that lies just between the first and second gap. So be aware of those if you're trading today. Here you can see that upper gap. Two nice closing candles in the afternoon yesterday took the Qs off of this 357.50, 358 area, and just powered on up into the close. So some real strong price action there in the Qs. 30-minute zoom in. I didn't adjust these, as you can see. Forgot to do that. Anyhow, you've got a $3 wide gap right here marked in there. And then if it breaks out of the top of the gap, you've got a 618 retracement there at 371. And then it'll be on to higher ground. IWM, didn't do much yesterday. Didn't do anything at all. Still inside this box, this range. Let's look here. You get some resolution on it. You can see from 208 down to 188 is this big trading range that we've been in, and bigger picture, until this breaks out above 208 and then makes a run towards 210, which is our key resistance, it's just going to be choppy type action. And what I will tell you though is, say we hang up in this area for next couple days, even today, if there's weakness in the SPY and the Qs, and it looks like the market is rolling over, you got a pretty objective entry here on the short side. I mean, we're sitting here at 206. We can see that for essentially 2 months, price has not been able to get above 208. So if you were to get short, you've got at most $2 of heat, coming your way if this decides to go higher. But, if and when it rolls over back to the bottom of the box at 188, would be my guess. If the market pulls back, blah, 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 you're at the top of a well-defined range. And at this point, if the rally is going to stick and hold and we're going to new highs, IWM is going to have to go along with it. So if you were waiting for a big type swing long, you got to wait for that breakout at 208 and then get long and then see what happens at 210, because that's the real long-term resistance that goes back a year. So depending on your view of the market and where this rally stands, we're high up in the range, and that range is well defined. You've got your overhead resistance levels at well-tested areas. So when and if you decide to take IWM short, it's going to be either against 208 or against 210. If there were a breakout today above 208 and you got up to 210 with a stall, I mean, that's as objective a short as you're ever going to see. Why? Because you're at resistance of a 1-year trading range, and the premise is that there's a lot of people trapped up in this area between 210 and 230 that are still holding, and so the presumption is that they will sell into any rallies into this area. So we'll just have to see which way it goes, but those are definitely two key areas that I'm going to be looking at. And then here's that trading range that we just talked about between 203 and 208. After this surge, we've just been oscillating for quite a number of days, which is in contrast to what SPY and QQQ have been doing, in the sense that they've continued their advances where IWM has stalled. Now, if you're new to the channel, welcome. Appreciate you spending some time with me this morning. Each day, I try to go over the objective levels for active traders, so you can gain some confidence in those levels and then work on your execution. If that sounds good to you, hit the subscribe button and the alarm bell. Give me a thumbs up and a comment in the comment section. I really, really appreciate that. And then go ahead and take the next step. Go over to the show notes and find the link to the blog site where you can register. It takes 15 seconds. Just drop in your email address, and then morning, noon, or night, you'll get all my content delivered right to you. You won't have to look for it. And you'll also get an invite to the trading room, where you'll get even more ideas, and a lot of ideas that never make it to these videos or onto the blog site. So, Facebook, I think you can use this 222 area as your pivot, looking for 226. If we go over to the daily chart, we'll see the progress that we're making. Now we've got the declining 50 EMA, and we've got the 38% fib retracement level above, as you can look at them as targets or as resistance. Same deal. You break above 226, your first stop will be at the 50, and then there'll be a line of resistance at the 38% fib at 240, and then you've got the big open gap, which starts about 248. So coming up on some levels. Apple, I mean, just keeps going. No red bars. That's pretty interesting. We're right here at 175, 175 and a half. If you're a swing trader and you're not in, but you want to be in, then if price breaks above here today, takes out this prior resistance level, then I think you got pretty much a clear shot at the old highs up at 182. So I would be getting long on a break above this right here at, well, we can get some resolution on that. Let's go back to the 60-minute chart. There is a little resistance here, but I think you can stay long against 175 and look for this 60-minute breakout above 177. I think if you're going to swing Apple long or plan to, I would do it now because it's either going to work or it's not going to work, like any trade. If this is bound for new highs, it'll get through this resistance. It might just hesitate for a minute, but then you'll be in, and then I think once it pops through 177, you'll be good to go for a run back to the highs near 182. I'd rather see you do that than, give up a couple more dollars for this resistance here to clear, because I mean, if there's one stock that's going to make it, it's got to be Apple. I mean, it's basically almost there as we speak. Tesla, gap up on talks of a stock split. I've got the gap marked here below. We're at the midpoint of this $200 trading range, right at 1090. I think you close above that and hold, you're going to see a run up to 1200 on Tesla. Microsoft, pretty interesting day. We had a big impulsive bar that went right up and filled this gap up to 311. And then it rolled right back to 305. And remember, when we went over the levels yesterday, and I mean, for a number of days and weeks, we said how important that 305 was. That was the triple original breakout level at 305. And so it would be perfectly understandable if this big opening bar either caught you by surprise or by the time you saw it, you thought to yourself, well, I'm kind of in no man's land now and I missed it. But remember what we say, wait for the next opportunity. When it rolled over, it came right back to that 305 to back test it, and then that was your second opportunity for an entry, and then you got the push right back up to the top of this gap. Now there's a little sliver of a gap here that still has yet to be filled, but it looks strong. Here is the daily chart. Here's that big 305 level. Now, and here's the 50% fib as well. You've got a level here at 315. I think that's going to be your first target. And then 221. Those levels, if you've been following along on Microsoft for any length of time, we've talked about these levels before, and so now we're going back to test them on the upside. So for today, number one, your first target is 315. Your second target is 221. But if for some reason this comes back to 305 again and holds, get long. Because as long as we're above 305, I think the chart is bullish until we see signs of it hitting resistance and then rolling over. Amazon had another nice day. Back here on the double bottom, we penciled in an 18% measured move. Seemed a little outlandish at the time, but now we're getting a lot closer. And now that prices jumped above this 61.8 fib retracement, I mean, there's not a lot to stop it from going to the top of the box here at 35.50. So as far as trading it today, if you got a pullback into 3,300 and it holds, I'd be a buyer there and see if it doesn't go up to the top of the box. That would be a great entry for you. Otherwise, you're just going to have to get long and then put a stop halfway back on this candle, maybe towards 33.30ish type area, and then see if you get the push towards the close today. Google, our measured move target off the bottom was reached the other day. Now we're consolidating right here at 28.40. I think that's your clear pivot. Let's look at the daily. We've crossed some major levels. Price above all the moving averages, broke above the downtrend line, is looking like it wants to take out the 618 fib retracement level. So my overhead target is approximately 28.70 and then 29.25. So I would be looking for those levels on the upside if you're long or you get long. And if you got a pullback in the 2800 that held, I think that would be a good level to shoot against. Netflix reached a high, little bit of a pullback, and now back up to this 281 level. I think that's your pivot today. It's really got to get through this 387 before it can open up higher ground. Let's look at the daily chart. You see you've got the largest volume over price bar on the chart right here between price and 400. So you've got about, let's just call it a $15 resistance zone. And then you've got the declining 50 coming in right above it. So there's going to be a lot of work to do on Netflix. But if price were to get out through this resistance and close above the declining 50, I think that would be a nice long. Why? Well, you would have taken out this big resistance. You would have recaptured these levels, and you would have recaptured the 50. And then look, you've got this big void here that really goes up to the top of the gap where the 200 is coming in. So quite a bit of upside opportunity there. I would set an alarm on the 50. Let me give you that exact level. let's just call it 410. I mean, it's 409.85. Let's call it 410. And if your alarm goes off at 410, then your first target will be 460 and then 500 at the top of the gap. So that would be a really nice risk reward trade. Semiconductors got into the gap yesterday, hasn't quite filled it yet, and that fill will come right at about 280, and that is an important level on the chart. You can see rejections along this line, had a couple fake breakouts, then broke back below. There's resistance back in the chart, and you can see this big value area that's been carved out. And once you get above 280, then you got some voids in the chart where price could really move. So if you're not in semis, I would be alarming 280 and taking that long if you get a break and hold above, and then your target will be 290 for starters. Got a couple of trades about to happen if you're interested. Here's AMD 1 hour. Been consolidating here under 120. You get a breakout today. Not a lot stopping it until it gets to 123.50, 124. Notice the large volume over price bar here. And then just above, you've got a relative void in the charts where I think that would be a pretty fast trade going from 120 up to 124, where you'll probably find it a little tougher going, but I like that setup. And here's a new, I don't know if I shared this one with you or not. GLOP, GLOP. It's a marine shipper. The one thing I like about this chart is you've got a very well-defined line here at 560. Reject, 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 reject. Multiple rejects, reject, reject on Friday, and down a little bit today, down 1.43%. But you get a break and hold above this 560 area. I mean, there's nobody home. I think you'd see a fast move up to 1250. And so I haven't looked at the option chain closely, to be honest. But at 550, I mean, you may want to consider just buying some common and just not worrying about, the time decay, or if you got the timing exactly right. Once you break above 560 and it holds, I think you got a green light to go to 12 and a half here. And also the sector has been really, really strong. We've got, what are the names that we've got? Safe Bulk. There's Sting. There's Diana. Quite a number of names. Zim. A lot of people are in that Zim name, ZIM. The marine shippers have been really strong. So I think this one has a nice opportunity to break above, hold, and then go on a fast run up to the next level of resistance through this big void here. So let's wrap it up. I'm still very cautious about this rally. We got quarter ending on Thursday, and then we start the new cycle. We're going to get consumer prices this week, and then that'll give Jay Powell a lot to think about over the weekend. So between the potential for a surprise rate hike, the potential for even more window dressing heading into the end of the quarter, I think you got to be really, really tactical here and stay on our toes. We got to trade price, and as long as it's going up, I think you got to be bullish. But from a tactical standpoint versus strategic, where you're just going to camp out in longs all day long, be cognizant of the fact that Jay Powell and his team have the high ground at the top of the hill, and maybe price is not quite in range yet. But the higher we get, the closer we get to Jay Powell and company, and he's going to feel even more emboldened to knock down financial markets with faster and more aggressive rate increases. So let's stay on our toes. Of course, I'll pass anything along today that I see, as I always do. Good luck in your trading today. I hope it goes well, and talk to you next time. This has been Chris Buss with Traders Profit Compass. Thanks for listening.